All right, I'm ready. Can you hear me? Great. Okay, the last time I was here, I think, was 2006. Might have been 2007, and most of you weren't paying attention to me. And at that point in time, because things were blowing and going and everybody was doing really well, and that particular speech was called A Contractor's Diet, How to Get Lean. And it was really to try to prepare you for the inevitable situation that we have economic cycles. And they generally last 7 to 10 years. So first I want to say that if you're in this room, you should be very proud that you are in this room, because it's been a horrible situation. My experience is that I write bonds for contractors, write general contractors, utility contractors, dirt movers, HVAC, you name it. I've written bonds for them for about 26 years. So I've had a lot of experience in looking at financial statements, what works, what doesn't work, and also had claims experience where we funded contractors and then we went in and tried to change the management or increase the flexibility of the company in order for them to make money. So what I'm going to come at with you today are what's going on, why it's going on, and people actually make money during a downturn. This is the second worst downturn in the history of the United States. And by the way, we are 51 months into this bullcrap. Okay, that's almost 5 years from the peak, because we measure a recession from the peak to the trough. So I have some really interesting information, but what I'm going to do is equate your company to a gear shift in a car. And that's why I call it stuck in neutral, because almost every construction company is stuck in neutral right now. And again, I have to reiterate, if you are sitting in this room, you should really be proud. To be able to make it and to be sitting in this room, you have done some really difficult things. You have probably had to right-size your company. You've probably had to take on more risk. You've had to downsize, and you've had to go into alternative markets. Okay, so I'm going to assume, for the sake of argument of everybody in this room, that most of you are stuck in neutral, but we're going to cover all the different gears, okay? And the different gears are park, reverse, neutral, drive, and the low gears, okay? What's interesting is that there has been about 10 to 15% of the construction companies who said, I am not going to go through this bull crap after the credit crisis, which was October of 2008. I mean, I can name several of Carolina's organizations that just, like an institutional GC that was building schools, and the backlog goes down to zero when they were a $40 or $50 million company, and they quit, okay? They just said, we're done, we're tired of it. I was given a speech just about 6 months ago, and there was a really large HVAC contractor, great guy that was there, and one of his questions to me was, how low can I go on bid day? And we're going to cover that today. He put it in park. He just couldn't go down to as low as it was on bid day. Because always remember throughout this speech today, gross profit minus overhead is what's left over. Always. That formula never changes. So if you're used to 10% margins and all of a sudden your margins are 1%, but your overhead is at 6%, that math is not sustainable. So those are the kinds of things I'm going to try to make really explain. I'm going to explain them in real common sense terms and go over them. So people went into park. People in reverse are not in this room, okay? And there's still quite a few people that are in reverse. Reverse meaning they're losing a lot of money, okay? That, I'm going to go through some reasons why it happened, and you kind of would say, well, why would you go and look at the history and why these people went into reverse? So that you can get through what's going to continue to happen. And by the way, I'm taking us out to 2016, okay? So we're going to actually look at reverse, to some degree, but we're going to spend a lot of time in neutral, and then we're going to talk about drive. There are some contractors that are making money right now. So the way I equate it is, park, you just decided not to even go through this downturn. If you're in reverse, you lost a substantial amount of money. If you're in neutral, you're what I call trading dollars. You're breaking even, okay? Making a little bit of money, losing a little bit of money. And then if you're in drive, you're making money. And I can tell you, out of all the customers that I handle, there are lots of people in various stages, and I'm going to discuss some of those things. Just as early as this past April of 2011, I had a dirt and utility contractor that's about $50 million in revenue who was hung out on a $2.5 million receivable by a developer. Their bank went into FDIC receivership. They bought a job because they were fearful and they were losing money, and they had no backlog. They are making money this year. It's only $25,000, but they're making money this year and they stayed in business. So I'm going to cover some of those examples and what you have to do in order to be able to make it through these gears. So basically what happened, the reason that I want to look a little bit at what happened from 2008 is that it was a bubble. It was a 30% illusion of growth that does not exist. Okay? The reason that I want to discuss that is because that 30% affects the supply and demand of everything that you're doing. Okay? 30% of the contractors have to go out of business. That's a big part of it. 30% adjustment on the demand for work. Everything is going to change and come down by 30%. And I want you to get that number stuck in your head, because those are generally going to be the adjustments and flexibility that you need to maintain to continue to get through this, which is not rebounding this year. Okay, one other thing I want to show you that I find is really interesting. The U.S. economy only grew at a 1% rate during the Bush years when you take out the housing stuff. Okay? So our economy was not growing at some alarming rate. It simply was the fallacy of the housing industry. That's why that 30% number is so important for you to continue as you maneuver through your company. These other things you already know, but I want you to remember 30% as you're doing any forecasting, looking back, or thinking about the future. Out of all the economic research that I do, which is massive, massive amounts, because I have to stay on top of what's happening in order to advise my customers, these two things I think are the most important. As the Microsoft CEO said, he said it's a reset. It's not really a recession like what happened after 9/11. And what happened after 9/11, by the way, was not a recession associated with a financial infrastructure problem. And if you take a look at all the recessions that have happened in the past, minus the Great Depression, they've always been non-financial related, and we got out of them through 2, 3, or 4 years. Okay? So he's basically saying this is a reset because it was a bubble. Okay, so if we reset, what we're doing is going back to what happened to 2004. That's really, really important. Not only the 30% number I want you to listen to, but also the fact that we need to go back and look at our financial statements, take a look at what our business plan was in 2004, because everything that happened from 2000 to 2009 was an illusion. And I'll get into that in just a second. The other really, really important thing to look at is that Carmen Reinhart and most economists are suggesting that if you have a financial meltdown, and really the only one they can compare it to is the Great Depression, it takes 7 to 10 years for the economy to fix itself. Okay? The height of this peak for this recession was December 2007. We're 51 months into it. Okay? It's 84 months to hit 7 years. The good news is that we're over halfway, but the bad news is this is not going to be over for the next 2 years. Okay, sorry. And in fact, I would like to take it out a little bit longer than that, but I'm always changing this information as I just sit here and watch and see what happens with Greece. I mean, if we have a default with Greece and then we move to Italy, Spain, and Portugal, I heard one economist talk about this going all the way through 2026. So you have to pay attention to what's happening globally, because that is going to affect your future. There's a way to get through this, though. It's called flexibility. And I'm going to teach you how to maneuver through that. But I want you to understand 30% is a big number for us to think about as you're doing planning, and that this is not over. Okay? And I'll give you some reasons why I think. Right now we have a little bit of an uptick, and this is the same thing that happened in first quarter 2011. Everybody's all really excited because, unemployment's dropped like 1%, and there's some potential jobs and some potential things that are happening. But this is simply a small uptick. This is the Architectural Billings Index, which you should monitor very regularly. So anything above 50 is an expansion, okay? Well, I don't really even consider that much over 50, okay? If you were to go back and take a look at these numbers during the boom, those numbers were way up here, okay? So that really shows that it's still very sick, okay? And this is by region, because I know a lot of y'all are from all over the United States. So the West is below the 50 number on expansion. 50 means there's a demand for work. The Midwest is at 53, which is actually good. It wasn't like that 2 years ago. The South and the Northeast are just above 50. Used to be years ago the South was doing great, so they've been hit the worst too. And I also used to say about a year and a half ago or 2 years ago that Texas was the place to be, and that's what threw the numbers off for the South, and that's kind of cooled itself a little bit too. It's not near as great as it was if you had just emerged in 2009 and 2010. Okay, this is just another slide that shows you there's a small little uptick, but not anything to get excited about. Because we did this exact same thing in first quarter 2011, and we still have not dealt with the European credit crisis yet. Okay, that still has not shown itself. Okay, also here's another one on construction payroll. These are kind of boring. This one is really interesting. This is the 2012 state budget shortfalls by state. And here's where a big part of the problem is. Right after the 2001 9/11 recession, if you were a private contractor, you could just flip right over into public work. You cannot do that right now. The average is a 17% shortfall, but look at all those states. That is not anything to be impressed about. Okay, those are budget shortfalls. They do not have enough money to handle the infrastructure and all of the requirements, okay? So all of this you have on your thumb drive, so you'll be able to take a look at it. But I think this one's really interesting because it kind of shows you still got more problems to have to deal with, even on the public sector. Okay? Also, I want to say who else is stuck in neutral? The Democrats and the Republicans are definitely stuck in neutral. Okay? They're not doing anything to help us. The bears and the bulls, while the stock market's up a little tiny bit for the first 3 months, in the grand scheme of things, it's not that great, and you watch for a major pullback. I guarantee that's going to happen by June because quantitative easing cash flow is going to be gone. Okay, and as soon as that happens, then the market dips because what the Fed keeps doing is putting in all this liquidity. It takes 6 months to eat it, and then you've got another problem. Now, the good thing is that we didn't have a double dip recession. The Eurozone is seriously stuck in neutral, and the banks and the Fed are seriously stuck in neutral. And the reason that I'm pointing this all out to you is because, no offense, but you typically are very optimistic in nature, okay? The construction industry is just very optimistic, or else you would never take on the risks that you take on every day. So there's many people who say, oh, everything's great, and I call that denial. If it ends up getting to where it's better, fantastic. You already know how to expand your business. The hard part is constricting it, and that's what I'm going to talk about today. This is another really interesting thing that I research. If you take a look at this, I'm going to have to walk down here for this one because this one's pretty cool. This is the peak to trough on every recession, okay? Our recession, like I told you, started in December 2007. Okay, they declared it over in June 2009. That was only 18 months. That's actually pretty good for us. If we hit another recession, though, I want to show you what happened. Where are we? Here. 1929 to 1933, 1937 to 1938. That was a double dip recession. The first one was 43 months. The second one was 13 months. It was 120 months during the Great Depression from the peak, which they measure by GDP, to when things corrected themselves and everything got back to normal, which was 1941. okay? 120 months. If this Carmen Reinhart economist is correct and says it takes 7 to 10 years on debt deleveraging for our current situation, that's 84 months, okay? We're in 51st month this month. So I want you to kind of look at it. I mean, if history, right there, that's a lot of months. Total from start to finish, 120 months. Well, this one's only 18. If Europe doesn't cause a whole nother double-dip recession, then we're probably okay, and I think we'll start seeing an uptick in 2014. So I just want you to kind of monitor some of this. This will help you to see that you still have 2 years of what I call trading dollars, stuck in neutral, okay? Now what I want to do is give you a sample general contractor. And the reason that I use general contractors and not a steel erector, which I could easily have done, is that their balance sheets and income statements are really easy because they broker everything, versus you have a lot of labor and materials numbers that make the financial statements more complicated for me to put up in simple illustrative forms. This is a general contractor from 2004 to 2011. Remember I said 30%, and I want you to go back into 2004. Okay, this particular general contractor went up to its peak of 30 million, and you take a look at what happened in the margin, okay? Now take a look at what happened in 2011. They went from 30 million down to 15. You could be 50 million down to 35. I mean, if you take a look at it, the average depletion of revenue is generally around 30%. But the margin depletion is greater than 50%. So that's a big, huge problem. I'm going to take this general contractor out all the way to 2016 later on in this slideshow. But what I want you to pay attention to here is when this contractor went from 30 back down to 15, what were they at 2004? They were already 15. Okay, do they have a financial statement in their project folders or in the executive's desk that has an organizational chart of who they were at 2004? Yes. They have massive amounts of information. When you grow, when you take your company from the beginning, every year you changed your organizational chart, you changed your operating expenses, and you expanded. The information that you're looking for on how to maneuver your company and be flexible is currently in your office right now, okay? So while you might go back to 2004 and the people are a little different, the positions really aren't that different. So if you run into any difficulty on how to maneuver to whatever your backlog is, the information's right there in your financial statements pre-2004. And that's what everybody is doing. Everybody is going from 2011 right back down to where they were 2004. And the worst part about it is every dime they made from 2005 through 2009, they're given back unless they're managing their company properly. So what the point is, and I'm going to talk about today, is how to manage your company properly. And there's really one motto. You have to exit this recession with the exact same cash as you entered. And if you didn't have a really good cash position, the next go around, we're going to teach you how to do that a little bit better. So that's your major goal if you're stuck in neutral, which means you're trading dollars, you're either making a little bit or you're losing a little bit. You want to manage that cash, and you want to make sure that that cash stays exactly as it was when you entered. It's not that hard to do. The execution is tough because you're depending upon a lot of people in your company in order to do that. And I'm going to get into some project management here in a minute. So my question to you right now is, what gear is your company in? If you're losing a bunch of money and there's no explanation for it, you're in reverse, okay? If you're trading dollars, you're making a little bit, or you're losing a little bit, and it's all relative to your size of your company and the cash position you have. For example, if you were flush with cash, and you made a decision to keep a certain amount of overhead and made a calculated decision to lose money, I don't consider that being in reverse. That was a calculated decision. If you're making money, you're in drive. And then there's, of course, all kinds of different levels to it. So the part was really important because we need a 30% reduction in the supply of contractors so that we have equilibrium in the supply-demand chain, okay? The demand for work has not changed. And it is not going to change for some time, because who loans the money for the demand for work to change? The banks. And are the banks solvent yet? No. Is the European debt crisis taken care of? No. Bank of America has the largest exposure to Italian sovereign debt than any other bank in America. So this isn't a little tiny problem. Okay, these issues related with the Eurozone are significant issues that you need to pay attention to, because they're going to have a lot to do with the demand for work and when you can pull the trigger, okay? But what I'm going to teach you today is how to stay in this nowhere man's land and still survive. Reverse, the big problem, I want to talk a little bit about what happened with people in reverse. Reverse, a lot of it was denial. And I have seen this, and it really blows my mind. I've seen this for 15 years, where you have an owner of a company who just refuses to accept that there are issues, refuses to be flexible and lay anybody off, refuses to, I don't know why it happens, except that they don't want it to be that way, so they just ignore it. That's been a huge problem. And the reason I can tell you that is I had to give a speech for the Construction Financial Management Association. It was a really large Carolinas construction conference. And I had agreed to do it in March, and it was set for October 31st, 2008. Well, I had already done a speech called Is the Prosperity Run Over in March 2008, so I knew that something was going on because the backlogs were diminishing for my contractors, but I had no idea it was a credit crisis. I mean, I had no clue. So when I have to speak on October the 31st, the credit crisis happened the first week in October. I had 20 days to figure out what in the heck happened and how to coach people through this. Well, immediately, my first conversations had to downsize. And I think, Eddie, you were in one of those, where's Eddie? You were in one of those meetings where I was saying the A, B, and C players, and I was explaining how to do this. Right after I gave that speech, I had so many people mad at me, okay? I'm not quite sure why they were mad at me, because it was really and truly the only way to handle it. It will always be the only way to handle it, and I'll get into how you hired those people during the boom time to help you through that. So part of this whole problem of reverse is that you just didn't accept what is. Another big, huge problem is taking work at cost. You might be able to do that, but you cannot sustain your business doing it more than one time. Why? The reason is, first of all, there's never been a job that you took at cost that went exactly as planned. You either make more money or you lose more money than you originally decided you were going to make. Never, hardly ever, does a job come in exactly on budget. So when you take a job at cost, you have no mistake money. When you have no mistake money, if you have one problem, you will lose a significant amount of money. When you lose a significant amount of money on a job, you're paying the owner to allow you to work, and then you're depleting your cash, and you're going to go into reverse. There are many uneducated business owners that do not understand this. Now, I could get into some real technical information about if you're a $50 million company and you take on a $5 million job at cost, and that particular job is going to pay some overhead. There is a possibility that you can do that once. You might be able to do that twice. It is not a sustainable practice, and it's what causes you to complain about everybody on midday. But yet, if you're the one doing it, you're contributing to the issue. So just like that buddy I told you that during the speech I was giving with the mechanical contractor who said, how low can I go? He had to park, he just didn't have a choice. In his particular situation, there weren't enough mechanical contractors who had gone out of business. As a result, there was an oversupply of contractors, there was a way under demand for work, and he just could not get his organization to a 1% G&A. So he decided to just, sit back and not do anything for a while. That is a realistic situation, and that is an issue. How low can you go? The answer will always be the same. Gross profit minus overhead is what's left over. If you want that what's left over to be zero, that's fine. But it can't be negative or you're paying people to work. I would just go fishing instead of doing that. But there are many, many people that really are not in a maturity level from running a business that understand that. Part of the problem with that is the barrier to entry in construction. So you have a lot of people that can start up with limited capital, and that's part of the problem in our business. Another situation that happened that was really interesting is there were a lot of leveraged personal statements. Before, if you were a business owner and you decided that you wanted to go do something personally, like develop a bunch of condos down in Myrtle Beach, it normally didn't impact your business unless you were majorly leveraged. Well, then with the 2008 credit crisis, the equity requirements from the bank on whatever development portfolio you had personally were very slim. I mean, maybe a 1% equity requirement from the bank, and then the bank changed their underwriting standards and said, oh, we need 10% now. So you had to come up with a lot of cash. Where'd you get it from? From the business. That happened multiple times. If the Fed came in, or the FDIC came in and took over one of your little community regional banks, they also changed their underwriting standards. So as a result, you're required to put in more equity, more capital into those investments. That contributed to a huge amount of companies that went out of business. So these general contractors who are doing all this pre-qualification crap and making you go through so much trouble, they're missing 3/4 of the whole issue. And that's what's happening to the personal financial sector, which really fund the business ultimately. The bank type maturities really haven't been that bad, quite frankly. I mean, they're going to be bad this year and next year, just because they don't like to see people losing a lot of money over and over and over again. But the banks really, in my opinion, contributed a significant amount. What ticks me off about it is, after the 2001 recession, the surety industry lost over $3 billion for loosening their underwriting, and anybody could get a bond. Well, the banks did the same thing. Nobody bailed us out. We had to take a $3 billion hit. That's another problem I have with it. The banks just changed their underwriting philosophy. What was really interesting is I had 2 customers and we were quite successful. We didn't stand for that crap. So we did legal lending liability lawsuits. And in both cases, one case we won millions of dollars, and in the other case we basically got out 30 cents on the dollar for our operating capital line. So these are the kinds of things that are going on where people are not playing ball the way they originally played ball. And my advice to you is, if you have enough cash, don't settle for it. So, I mean, in both of these cases, these general contractors would have been put out of business by the bank. One of them had a $1,250,000 working capital line, the other one had a $2.1 million working capital line. And both of these companies had no reason, there was no information to change the underwriting whatsoever. They were with community banks. The Fed came in and said, we want you to raise your reserve standards. So we're still not finished with that yet. And you need to be very, very careful who your banker is. No offense, but I wouldn't trust any of them. Okay, where most everybody is in neutral. You're trading dollars. And I have to tell you, it's a great place to be. If you are breaking even or barely making a little bit of money or losing not millions of dollars, you know, losing 150,000, 250,000, depending on what size you are, you should be very proud of what you're doing. And that's the way you get through the next 2 years, okay? And what you're doing is you've got to manage the income statement, and I'm going to get into that. I have a lot of information. Like I said, I'm going to assume most everybody in this room is in neutral, or else you wouldn't be here. And I'm sure some of the people that aren't here that were here last year may have been in reverse. The trading dollars really is what I want to concentrate on. I'm going to go through 3 things. Now, on my website, which I'll have the name at the end of it, when I did the speech here 2006 or 7 or whatever it was called The Contractor's Diet, How to Get Lean. That really was a best practices speech, and it had massive amounts of information. I'm sorry to say that 25 years of everything that I know is in 5 pages. So it's on my website. Bruce has seen that article. And then I also have next to it a 2012 updated version called The Keys to Success. It covers every facet of your business. And then Stuck in Neutral will show up there in May and June. These are getting published, these are professionally published articles through the Carolinas Financial Management Association. Okay, remember, gross profit minus overhead is what's left over. It's really that simple. And I want to also bring up, you only control 2 areas of your income statement, contrary to what a lot of contractors think. You do not, and by now it should be obvious, have anything to do with the revenue, right? It's economics. Revenue is only the availability of work. How many contractors do you know that have managed the top line, especially during the boom time? Oh, we're a $60 million contractor. They don't get it. You do not have control over the revenue. It is a function of supply-demand economics. You also have no control over the gross profit on bid day. That is a function of economics. You can bid 10% all day long, and if it goes in at 3% on bid day because of oversupply contractors and under demand of work, you absolutely have no control over that. You have only control over two things, and it is vitally important that you understand this while you're stuck in neutral. You have the ability to pick up profit once you get a job, okay, which I call profit pickup. Most of you probably have profit fade, which we're going to talk about. And you only have the ability to control your overhead. That's it. So how many of you spend so much time on what's going on bid day or how much revenue you have? You're chasing the two things you have no control over. So everything in your business right now must be dedicated to making sure that when you get a job, you protect the profit in the field. Everything should be concentrated with project management right now. And everything should be concentrated with how much money you spend keeping that business open. There is no other thing you need to be concerned about. And if you do those things, you can at a minimum trade dollars, and I will tell you, you can make money if you concentrate in these areas. It's not easy, but I've watched lots of people do it, okay? The first thing you do for organizational management is you have to define 3 contingency plans. A lot of people that were in reverse had that, and I'll show you how to do it. I've given you a beautiful Excel spreadsheet that was produced by Great American. Thank you, Great American Surety Company, that will help you with this process. If right after 2008, you were a $50 million contractor, if you had produced a contingency plan that said, oh, I think 30% of my revenue is going to drop, and I certainly know that my margin is going to go down because there's too many contractors, so there's downward margin pressure on bid day, and produced that information, when it was time to make decisions on what to do, you just pulled it out of your drawer. And you have 3 scenarios. You have the best scenario, the worst scenario, and the most likely. The most likely is a 30% reduction in revenue and a 30% reduction in margin. The worst case is a 70% reduction in revenue and over a 50% reduction in margin. And then the best case is, anywhere in between. So you can't just do this stuff when it's time. Why? Because of emotions and human behavior. First of all, you're always tied based to organizational charts that don't have names, only positions. And when you have this information already prepared, all you do is pull it out of the drawer at the time. And I'm not saying that you might not have to do this again. I mean, I'm hopeful that we tick up and it stays that way, but you cannot plan according to that. You have to plan with the uncertainty that's still in Europe. You have to plan that there's a possibility that none of this changes until 2016. So if you do not have at least 3 contingency plans, and most of my customers, by that way, have 10, because there's various scenarios. And we've already covered it. We take out so much of the fear, and it changes their organizational management. It changes the entire tone of the company. Because how do you eliminate worry? You go ahead and plan for it. You plan for the worst case. And then there's nothing to worry about because you've already figured out how to pull the trigger once you've already planned for the worst case. So, I'm going to go over this Excel spreadsheet, which y'all are so lucky to have from Great American. Okay? This takes your prior year-end results, okay? I'll just kind of go through it right here because that's an example, but I'll show you how cool this is. So after leaving today, you have no reason not to have 3 contingency plans, but that just makes it so unbelievably easy for you. All you have to do is populate the information. This is that case of the $31 million contractor. Right here, all you do is you go in and put whatever percentage drop you want revenue. In this particular case, we did a 30% drop, okay? So that put us at $21.7 million in revenue. Now you're managing from 1,000 feet, but you understand you can't get specific until you manage from 1,000 feet. Okay, these were real true, this is a case study, but these are real true numbers for 12/31/2008. So this particular GC had a 10% margin. Well, you go in here and you change it, what you think your estimated profit is. You're only entering a number here and a number here. So we took it from 10% 6%, okay? Here, we did not change, where's that G&A? Okay, here I made a $250,000 cut in G&A. This company's going to lose money, so at least I know already I got to cut $250,000 of G&A in the event this world happens to me. Didn't you just take out a whole lot of the guesswork? So then your job, which I've done several times, is to figure out where $250,000 is going to come from. I can generally do it in about 30 minutes. Okay, so here we've got, in this case, this is what's interesting. We can take a look at the cash flow from operations. All right, right here, in reality, it depends on what kind of company you are. I just left the tax in there because in this particular case, it was an S corporation, and so they're paying that number based on that income. So even though they're losing money this year, they still have a huge tax bill. So the net effect of this company is $448,000. Well, that's not really the cash that came out of the company, right? It's just not. That's the paper transaction. What really happened is that this company had a positive cash flow of $67,000. Because $350,000, their CPA would get really smart, they do quarterly things and all this kind of stuff. The point of this number right here, and you guys are going to kind of look like that because you have so much of an emphasis on equipment, these people didn't take anything from their cash position, okay? They put $67,000 of positive cash flow back in. So the point being that I can tell in this situation, if we lose 100 grand, we're not going to mess with our cash, okay? You can do this at 50% drop. I mean, I can go to a 50% drop right now. These numbers, I mean, really we're talking about you doing 4 entries. This is how I managed everybody. Right in 2008, this is what we did. Okay, so let's just do a negative 50% drop here, okay? All right, now, we're up to a $470,000 loss. Okay, we still only cut $250, so it's pretty obvious that's not very good. Let's take this profit down to 3%, because it really shows for GC right now 1.5. Okay, $935,000. So you are going to produce all these likely scenarios, and then you're going to be able to see what G&A has to be cut. Then you're going to go back to the years that you were in business at those levels. So in this particular case, this company's $15 million in revenue. They were $15 million in revenue in 2004. So in 2004, we're going to go back and take a look at our organizational chart. And we're going to see how we were structured. And chances are, what you're going to see happen is the inserting of a level of management underneath the owner, and most of y'all probably know companies, and that's a layer of management that you inserted between the 2005 and 2009 timeframe. So you're just undoing everything you did. And in the future, you better be prepared to do it a heck of a lot better, because you actually are going to be able to make a bunch of money if you're still standing between 2014 and 2016, or things happen. I want to say 2016, there's going to be an open demand for work. The contractors that are left standing are going to be fewer and far between, and you can dictate what margin you have. And then you're going to be able to make all that money back. But here's what happens every time, and this is what I was bitching about in 2006. You take all that money, and you go spend it, and you grow, and you hire a bunch of people. This next go-around, when you have the ability to make back everything you have not made for the past 5 to 7 years, please do it a little bit differently. Maintain rainy day cash all the time. So here I've given you an opportunity to do the contingency plans without you even having to give any thought to it. And by the way, these are the kinds of things you should expect from your outside key advisors. This is the kind of stuff I do. So it's really hard for my customer to say, I don't really know who to cut. We've already done that. We did that in 2008. By December 2008, I had everybody was covered. It really did change the way they managed. They weren't fearful. They were very, very different as a result. Now, when you get into financial management a little bit, okay, you have to be prepared to break even. Okay, that's what stuck in neutral is all about. So if you only control 2 areas on the income statement, I want you spending all your time on project management and the protection of cash, okay? Project management and the protection of cash. That's also going to include overhead analysis, okay? All these things have to do with how to collect money. The generals are really strange. Most of y'all do, most of your owners are actually general contractors, am I correct? Sometimes an ultimate owner is in an energy company or something like that. But for the most part, don't most of you do business with the general contractors, right? You better be careful with them right now, okay? Because they have just as many problems as everybody else in the world. And they're making it really difficult for you from a pre-qualification standpoint. But I love what Bruce Basden said in the last Steel Erectors magazine, where he says, hug your customer. It's so important that you are in front of those GCs, because to them right now, you are a commodity, unless you make it different, okay? They are paying so late. I have one of my very large $100 million electrical contractors who used to have about a 48-day collection with the GCs. It's over 75 days now. And there's nothing wrong with their billing system. That's just what's happening to the world. So you have got to draw a hard line. You're not going to accept it. You also have to draw a hard line on what you're willing to take contractually. Just last week, I had a nursing home, a large nursing home, where the owner of the nursing home decided that they wanted to put in consequential damage language into the contract, which you can never do. You will never do, because you're basically paying for things you can't quantify. You always do liquidated damages instead. I haven't seen that in about 5 years. I haven't seen that much of a push down. And so I'm really having to review the contracts, because the owners are sticking it to the general, and the general's sticking it to you. So you need to be really careful. You also have to, when you make a decision, you have all these contingency plans, and let's say we have another downturn, then it's really important that you do all this stuff in 48 hours. Don't let it linger. Just do it. Just make the decision, do it, and then move on down the road, so that you don't hurt all the different morale in your company and that kind of thing, okay? So these contractual rights, I can't stress enough what's happening. Be very careful with contracts. Watch those generals. Watch their payments. And you cannot accept that. And you just make a decision that you're not going to accept that. Something else I find interesting in construction is there's this entitlement problem, and a lot of times people don't want to get confrontational about it. You are not working for free. Okay? And you expect them to manage their business, so you need to do the same thing. This is going to take your money. This is going to take your cash. And remember that what we're trying to do is to keep our cash position exactly the same as what we entered when we exit. Okay? Now, this project management stuff I want to talk to you about, because this is the most important thing. And if you go back to what I did in 2006, I had some massive project management information there. And I didn't really want to get into a whole lot of that today, because I'm going to take you to 1,000 feet. It's your responsibility to decide how to execute it. I'm just telling you what's important. And out of everything that I've studied, where the major issues are. Right now, project management is all you care about. On bid day, if you are able to get a project with margin discipline, and let's just use a 5% number, you cannot afford for that number to be 3 at the end of the job. You cannot afford that. It has to be 5 or better. And where's that happening? Project management and superintendents, okay? And I don't know how everybody could be structured differently, but it's basically your field management system. And I will say that if you do manage from the standpoint of you have project managers and then you have superintendents that are in the field, hug the superintendents, because they're the ones that actually make you money, okay? Out of all the successes that I've seen, every time there was a layer of project management, it was kind of a sophisticated guy who graduated from Clemson or he graduated from NC State or whatever, and in our particular territory, and handled a lot of paperwork, and sometimes they were hired with a project administrator to help them with the paperwork. It didn't matter how much time you sat with them. It's the superintendent, okay? Hug the superintendent. I have one general contractor who generally did about $35 million in revenue. Now they do university work, so they haven't been creamed as a result of the credit crisis, but I couldn't figure out, he would make $1 million every year, and I couldn't figure out, that's a lot of money for a general, because they have really thin margins. Like for you, you've got control over labor, it's some control over equipment and materials, and if you're really, really good at it, you have an opportunity to make a huge amount of money. Generals aren't like that. They broker everything. So I'm like, how in the world is he making $1 million every year, no matter what? They just finished up their year. They did $8 million in revenue, and they're making $1 million. How is he doing that? He spends all his time with the superintendents. That's his job. And the superintendents love him, and they know how to get the work done. So I can't stress that that really is, the field management is your secret right now. You have no mistake money. There's 30% or greater downward margin pressure, and there's not enough work. So that's why all this is important, okay? The first and foremost thing you want to teach your project managers, and I'm not so much your field superintendents, because they don't give a crap, all right, about any data. They don't want to hear about it. They have no desire to write anything down, and all that does is cost you money. Okay? So the real truth of the matter is that you're not going to change them. They will not change their personality. They might follow you if they feel a reason, if they have some kind of desire, like you put a carrot, maybe they can make some more money, or you give them somebody to ride with them in the truck and help them, or some newfangled tablet, and they actually might care about it. But for the most part, it's not going to happen. You give them 5 of the most vulnerable cost codes, and you write it down on a piece of paper, and you just hand it to them and say, these 5 things, you're going to make or break the company. That's how you handle the field management. Don't try to do what happens from the office into the field, because it's just not going to happen. Come up with more creative ways to get people that don't want to write anything down to write something down, or provide you the information, because you will have overruns if you do not figure out how to get that data. So never overload them with anything more than the 5 most vulnerable cost codes on any project. And how many cost codes do you have? And you're only going to give them 5 that are the critical ones, okay? With the project management team, it's a completely different side of things. How many times do they manage the contract, not the budget? First of all, there's probably some people in this room that do a budget, and they look at it at the end of the job. And you people need to fix that, okay? Because you cannot protect your margin if you don't know what your budget is. So the estimator takes the job off. All those cost codes are then loaded into the system, and it creates a budget. What normally happens is the project manager takes a look at it maybe 45 to 60 days into the job. This has to be done every single month. And they can't manage to the contract. They have to manage to the budget, because if you have an overhead and profit number in there that elevates it $100,000, they think they have $100,000 worth of cushion. So you have to be very, very careful how you teach them to manage to the budget, not to the contract. I just did a lunch and learn 2 weeks ago for one of my customers, where I went in to the project manager specifically to teach them how to do this, and they don't really know how to do this. But part of the problem we found out in the company is that the company's throwing overhead and profit. They're looking at that number saying, you're rich. No, we're not rich. That has to feed tons and tons of people, and that information should even be a part of their budget. It's a cost-to-cost standpoint, and the estimator has to turn it over and level set everybody if you have it separated. And there has to be, I think y'all had a guy in here yesterday that was teaching you how to do turnover. Turnover is vitally important right now, okay? So another thing that you've got to do is cost to complete. And there are many times I ask for a work in process as a surety agent, and there are a lot of customers who don't provide a very good one. Well, not now, but they're used to it. That information is so vitally important to you protecting that profit. And if you have a controller or a CFO in your company, and then you have project management, sometimes if you have a controller, they're transactional. They're really concentrated on receivables and payables and billings. You have got to have someone who sits down with the project managers and says, tell me what the cost to complete is. And it has to be accurate, okay? If you don't do that in your forecasting, if you do not forecast, you have no idea if you have a problem, then you can't come in with creative solutions to protect the profit. You end up with profit fade, okay? This is extremely important. This last one is all about, which I should have learned yesterday about project turnover. The cost to complete is the most important thing that you can possibly do. And I'm telling you, they don't do it, and they don't do it accurately. I'm talking about even the $400 million companies I go into that have all kinds of layers of management. They are not doing it well. Now, why? Okay? This is really interesting. Forecasting is an art and a science. Okay, a lot of times you'll have the transactional controller in your company that's not really a big picture person and it doesn't maybe know a lot about construction, trying to gather data that's forward thinking from project managers who are stressed out. There's a disconnect every time. Okay, the art is in the personality, and the science comes from the data. Usually you have the data from estimating, and then you have a project set up with the cost information, right? Well, here's what goes wrong. Out of all your project managers, and you can actually take this down to the field, and this was written by a guy in a CFMA building. He's a CEO of Coins, which is a heavy highway cost system and a great cost system. Anyway, he labels all the different project managers: the pessimist, the procrastinator, which most of them fall into, pessimist, the optimist, and the realist. If you do not get everybody into the realist position, you will have profit fade. And why is this so important this year? Because we're trading dollars. We can't take any of our cash. So the only way to do that is to make sure that you don't have any vulnerability in the field. I just did this lunch and learn with all the project managers, and they did not want to label themselves. So what we did is the owner had to label himself. We had the owner label himself and the vice president of operations label himself. The vice president of operations was a pessimist, and guess what the owner was? A realist, okay? None of those guys really wanted to do it, but I wouldn't let them get off the hook. You're going to have to label yourself. Every one of them were procrastinating. Buyouts were taking way too long to happen. They were spending massive amounts of time running and chasing things and never really doing what they needed to do. We need to take a look at the budget for about 60 to 90 days. It has to be done monthly for a general, and on your issue with labor and equipment, you want to be looking at it every 2 weeks at a minimum, unless you have a very fast-track job. So in this case, here's what happens to the budget. The budget is in black, okay? So with the procrastinator, we have no idea what we're doing on that job. We have an 8% margin, and at the very end of it, it falls down 5. Okay, because he didn't even bother to put the information in, so nobody knows. And if you ask him or talk to him, oh, it's going great. Okay? The pessimist takes everybody's resources, because the pessimist is saying, I'm not going to make any money, this job is hard, I've been managing the budget, God, you got to help me. So the owner says, well, let's take so-and-so off this job and put him on his job. Well, his job, meanwhile, was a traditional, normal job. But because the pessimist is a pessimist, he's bothering the resources of the company, and you're taking him from a job that could have been vulnerable. The opposite, you see here, he faded also. The optimist, he doesn't tell anybody. Everything's hunky-dory until the end of the job, and then at the end of the job, I'll offer up, say, hey, we have a really big problem. We're going to lose some money on this job. Okay? You can think in your company right now, I guarantee you can label every one of the people in your field and every one of your project managers. We want everybody here. Okay, look at this. This is not a straight line. That never happens on a job. But you're going to think that you're losing money, and then you're making money, and then this job came just a little bit right under budget. That's what really happens. So if you are really doing the budget analysis, you're going to see that job do this, okay? Now, when you report to the surety company in the bank, you're going to be conservative, and your jobs are always going to come up, a little bit at the end. But in real life, that's what happens. So if you will spend the time to go and explain Bruce and I were talking earlier, and he said they just don't get it. And they don't get it because they're not running a company. You are. If they were running a company, they would get it, okay? It's not their everyday thing. It's not their business maturity. It's your responsibility to explain to them why. Why is this vitally important? Well, you want to pay your mortgage. That's why this is vitally important. But see, part of the problem is you don't share enough information with them. You don't really make that much money in the grand scheme of things that you should be afraid to share this information with them. You need to explain to them that they're lucky that they have a job. And then you need to get them into a situation where they are doing a forecast. They have got to forecast. Okay, so if you're stuck in neutral, what are the most important things? You've got to keep the same cash, okay? And if you've not done that, you're going to have to even dip a little lower to replenish what you've already spent. You got to have those contingency plans. You have no excuses because I've given you everything to do it. And you have to become a great project management forecasting company. If you have weaknesses in it, start researching. Okay? There's massive amounts of information that's written about forecasting. Okay? Then I want to go over really briefly, I don't know how I'm doing on time, but I want to go briefly over the contractors that are in drive. Yes, I have contractors making money. And the question is why? How? This is the reason, okay? First of all, they right-sized immediately. As soon as they saw what was happening, they basically changed their company and anticipated a downturn. They had their free contingency plans. Like I told you, we did it in December 2008. I had to go around to like 18 people, 18 different companies, all within 2 or 3 months. You know, and a lot of people really kind of go, well, what are you doing that for? You know, well, you knew if you had a financial meltdown. Well, I happen to know all this because I've worked with companies that have been financial meltdowns. The larger the company is, the harder it is for me to rehabilitate and turn it around. Well, we're talking about the federal government. I mean, so, you know, if it takes me about 4 years to take care of a $40 million company, then we're in this for a while. Okay, then also other things that they did is they increased the elevation of the business maturity of their staff by taking the transactional controller and actually asking them to do a CFO's job, which is to forward think. Okay, they take a project manager and ask the project manager to motivate some of the superintendents. In one case, a superintendent was brought into a project manager's job for a period of time. There's some cross-training. There was, let's pull everybody together and try to figure out what everybody's job is because we might have to downsize. So they did spend quite a bit of time training with them. Like I told you, I do lunch and learns every quarter for the people that do the work. Okay? We share with them information. We tell them how the business is run, and then we remind them they're lucky to have a job. Okay? Also, we spend an enormous amount of time right now while your volume is down. You have no excuse for not perfecting project management. So that when the market does turn, when it does change, you are an incredibly well-oiled machine, able to stick it and drive immediately. So if you were used to making 8% margins, when everything turns around, you're going to be making 10, 11, and 12. Okay? So you can't keep doing your field management the way you did prior to this downturn. These people that were in drive, that is their focus. I have one large subcontractor who has spent probably about $35,000, $40,000 on process engineering, which they really didn't have the money to spend, but decided it was so important that it affected the field that they ended up spending this money to make sure that they were capturing as much future profit when the market does come back. All of these things you can read later because I think I'm running out of time. These are the things, these are the common traits of everybody that is making money that I can list for you so that you would see what the categories were. Okay, now I want to move forward a little bit. The economy is going to recover. It always has to. I don't think it's going to start to recover until 2014. And I don't think we're going to really see any kind of return to normalcy until 2016. And that's for the reasons of the various slides that I gave you. There's massive amounts of research I've done underneath those, but that's my opinion. Now, like I said, we've had an uptick, but we still have European uncertainty. In 6 months, I may change my mind. You know, depends on everything that happens. But what's going on with the world right now is that you have to be the best at what you do. Okay? So I've just given you all the recipes for that. So that's what you're going to do so that you can make back all this money later. What's going on in the world around you, this is real. You're doing a lot of business with general contractors. I think, and we're already seeing this, and I told you the state shortfall, downfalls are massive. You're going to see the Balfour Beatties of the world start to become not just a turnkey that we think of, which is design build. They're going to become financing design build. They're going to be the money behind the project. Then they're going to design the project, and then they're going to build the project. Okay? That means they have complete control over everything. You are already seeing proposals happening with school systems all over the states because they don't have enough money. So you have a large public construction company. There's not very many of them. They come in, buy the site, finance it, build it, and then lease it back to the government or the municipality. That, in my opinion, these are my opinions, is going to be something that could potentially happen unless we recover quickly. If we don't recover quickly and my forecasts are accurate, that's a real thing. So you better, as Bruce Mason says, hug your customer. And your customer is a general contractor, okay? And you're just a number to a Balfour Beatty. You need to be more than just a number to a Balfour Beatty. Green construction is growing, okay? LEED certification, at least one person in your company should be LEED certified. But there's huge litigation going on, starting to go on right now with green construction because people do not know who to sue if it doesn't meet the standards. So stay on top of it and at least be able to market it as something that you are familiar with. And a perfect example is, Eddie, don't y'all have like a beautiful green, your office is a green office, right? That you use. Right. And so you have that on your resume. You know, that you have built a green job. That's real, it's here, but it's not without future potential litigation, and there's not a lot of case law yet, so be very careful. Healthcare, infrastructure, multifamily, educational, they've been holding it. Okay, so if you are a school builder, chances are you want to enter into the university work, etc., etc. Multifamily won't live long. Everybody's trying to do it, so in 5 to 7 years, that bubble will pop. Okay? But healthcare and educational, those are viable businesses that are going to be around for a long time. And I don't know what's going to happen in November, and I really don't want to get into it, but I kind of have a feeling we're not going to get a Republican president. And if that happens, I mean, I would have expected the infrastructure spending to already happen, and it hasn't. And the TARP money that came out, the American Recovery and Reinvestment Act, I didn't see jack from that, okay? So, I would like to think infrastructure is going to be the future. We have to, because the bridges are going to fall down. So, I think that's still something you want to consider. I just don't know what the future is going to hold for that. Alternative energy and H2O conservation are definitely real. The problem we have right now is that we don't have enough technology, and the federal tax credits is what's driving it. As soon as we have a technology leak, that world is going to go off, okay? Natural gas, in my opinion, even though it's at a very low all-time low, we're going to see that in the next decade. Natural gas is a really important part of our economy. And also, this is something I don't know a lot of. This is kind of cutting-edge information that, you know, I spent all my time researching. I think we're going to see over the next decade a manufacturing return to America. And the reason for that is because in China, they have now developed a middle class. The Chinese average wage used to be 48 cents an hour. It is pushing upwards of $12 to $13 an hour. In America, the average wage for manufacturing is $15 an hour. And what we have that's interesting that they don't have is equipment and machinery that takes care of technology. So we don't need as many people doing it. So there's actual increase of an uptick on manufacturing facilities coming back to America. And the quality issues that are going on with China right now are going to also prompt it. So watch for the next 5 years and see if you don't notice an uptick in manufacturing. So do not lose your finger in industrial sectors, manufacturing sectors, because I think that is coming back. And it already has happened. There's already some manufacturing facilities that have started up. And as China continues to increase their middle class, and middle class wages go up, they have more choices. So they don't like being in certain factories. And you can go look at Japan, you know, back in the 50s, and see prior to the 50s, and watch the exact same thing happen. So I wouldn't be a bit surprised over the next decade to see a change in that, so keep your hands in it. This much I know is going on right now. How much it changes, I'd have to come back here every year for that, you know, because because it does change. Now I want to take you, we're almost finished, I want to take you on this general contractor to what I think is going to happen. Now this is my opinion, okay? So you can take that with a grain of salt. All right, we started out at about 16 million in revenue, had a $35 million peak in 2007. Okay, we're right here, 2011. Look at the margin, isn't that pitiful? Right here's the bottom, third quarter 2013. Then you're going to start to inch up. And at 2016, you're going to start feeling a little bit of return to normalcy. Okay, we're only back up at 2018 to 25 million. And after that, I think the sky's the limit because it takes that long to fix supply and demand. This is supply and demand. There's a problem. It's not an equilibrium in supply and demand. There's oversupply of contractors and an under-demand for work. And because it was a financial infrastructure meltdown, it's going to take 7 to 10 years. Because of the European global debt crisis, I think it's going to take closer to 10. Now, I hope I'm wrong, but I mean, I've been studying it really hard. I just don't see any way it can happen any quicker, okay? I think 2014, you're going to feel better. You probably feel better right now just because of the uptick in the first quarter. But I think 2014 you'll feel better. So trade dollars for 2 more years and perfect your project management, okay? Do not lose money in your company. So here are the top 5 things you can do. Those contingency plans, I've just made it so easy for you. That contingency plan Excel spreadsheet that I gave you is worth your entire price for coming here, okay? Because it took us a lot of money to develop that. All right, then I want you to execute that plan in 48 hours if you have another downturn or something happens in Europe. Move in 48 hours. Become a great forecasting company. Become great at cash management. Your goal is to exit with the same cash you entered. And then I want you to think of forward-thinking efficiencies. There's two companies here today. I'm not going to name their names, but I was really impressed that they've diversified their business. They have already diversified into a different kind of business. And it cost them some money to do that. They did it kind of slow, but still it's really smart because it's a source of fun. You need to think about that. If we go back to what's happening in America, and there is a possibility manufacturing comes back, or you want to go in the healthcare range, think forward, okay? And then build that up, make it really efficient so that when you do get some market share, you make a lot of money. You have got to hug your customers, as Bruce says, and you got to stay on top of American innovation. Every time we go through this stuff, it's really interesting that somebody invents something. We either go to war or somebody invents something. Okay, so that'll help pull us out too, and that might pull us out a little bit quicker. So I thought you might want a shot of tequila since I didn't have anything great to say about, oh, the world's going to change this year. It's not, sorry, in my opinion. So I wanted to discuss that. And then one other thing I wanted to share with you. On my website, I told you those articles are on there. This one will be on there in May and June. So you can just go there and download that, print it out for your project managers, your superintendents. Well, they don't really like to read. Just do it for your project managers. And take any pearls of wisdom. My goal here is to help all of you make money. That's all I care about. I really enjoy that, and I really enjoy the fact that out of all of my customers, I don't have anybody that's not solvent. And I'm very, very proud of that, especially considering a lot of the difficulty that we've been through. But having said all that, I want to kind of move to something that's just a little bit more motivational, a little different. Over the years, I've had many people say to me, how do because I see so many different contractors needing thousands and thousands of financial statements. And they say, what is really the key to success? Why do some make money regardless of what's happening with the economy? What is it that they do? And I just gave you a whole lot of data, right? A whole lot of technical information and a lot of best practices. But it's really not that. It's deeper than that. And I have this book up there called As a Man Thinketh by James Allen. I don't know if any of you have read it, but it's worth it to go get it. It's Barnes & Noble. It's like $11 or $15. You can actually download it for free off the internet. What I have noticed is that the people who make it think they're going to make it. The average person thinks 60,000 thoughts in a day. If half of your 60,000 thoughts in a day are, we're not going to make it, I've got too many problems, I owe the bank, I got this issue, then that's what's going to happen to you. If over 50% of your thoughts are, we are going to make it, we're going to get together, we're going to become stronger, you will make it. And a perfect example I'm going to tell you, and I've got a million of these, but I'm just going to tell you this one. I had a subcontractor who came to me who was losing $2 million on a job. And they were a $35 million company. And he's like, he's into his bank line, almost in full. It was a huge problem. What am I going to do? We cut overhead in 48 hours, restored him back to some normalcy on cash expenditures. And then we had a whole kind of greater conversation, divinely speaking. And he made a decision then that he was not going to think negatively, that he was going to think positively, and that failure was not an option. And he wrote on a piece of paper, failure is not an option. He just sold his company for $13.5 million last year. I helped him transition out of that. And he still has that piece of paper in his desk drawer that says failure is not an option. You are a summation of your thoughts all day long. If the majority of those 60,000 thoughts are negative, that is what will happen in your life. If the majority of those thoughts are positive, that is what will happen in your life. You have already made it this far. You should be very proud of what you're doing for your community, how many people you employ, and you should enjoy the fruits of your labor. So I say, think positively. I've given you the tools today to get through it, and let's make money, and I'll come back in 2016 and we'll do a shot of tequila. Okay?
Thank you very much. If you can't find a way to make some money out of that talk, you must have been asleep. It may save your business, but it can certainly make a lot more money than it costs you to come here.
I just want to say a couple of things. We did hear Bob Rand speak, 5 years ago. Excuse me, I lost my voice. I don't know whether it had anything to do with last night or not. But based on what we'd heard Martha Rand say and some good advice from some in-house people like Buckner, about 3 things that we did early on. One, we did develop a leadership team, and going from just 1 or 2 people making decisions, we now have 8 people, key people in the company that together make decisions as to where we're going and how we hope to get there. That's helped a lot. We also kind of set a baseline of how low we could go and not just follow every job that comes up for the sake of following it. We developed a list of A team, B team, and C team, anticipating that we would have to have a downturn, layoffs, and which did happen. But we kept the A team, and fortunately now we are adding back other people. Things are going fairly good, but I want to stress too the importance of long-term relations. When you're in an economy like this, you need to depend on long-term relations, so let's continually do a good job and develop these relations.
Thank you, Eddie. That's words of wisdom. We've got a few minutes for topics. We don't have any topics to present, but if you've got some topics or some questions or there's some things, some areas that you would like to see this organization work on or develop, now's the time to express yourself. Don't be bashful. I know you're all optimists now, no negative thoughts. Bruce?
I know y'all get tired of me talking, but I just want to tell you that our board of directors is getting a little long in the tooth. We rely on a very, very good group of people to basically run this organization and do the things that need to be done. We have a very small staff of folks that work in our office, and thanks to the contributions of our forefathers and the people that cared about other people, we have a really good organization. But we really, really need to think about our next generation on how we're going to carry the association forward. The terms of our officers are getting too long, and our board members, and we really, really need people to think about stepping in and getting involved. Many years ago, 10 or 12 years ago, it was, Bob Buckner recruited me to the board and recruited me to the association, and I have had countless dividends paid from that. And I want to take this moment to thank you, Bob, for showing me the light, I guess I'd say. But I tell you, over the years, I cannot tell you how many great friends I've made. Sorry. But I've seen a bunch of people fall out this year because they didn't recognize the value, the stuff that Martha Ann's telling you. And I tell you, Martha Ann, I wouldn't have a company today without the things you told us in 2007. Thank you.
Thank you, Bruce. That's a very, very important subject. You know, the new blood in the organization. We are a lot of people. You get burned out. There's you know, this is a great paying job. It is a great paying job, but it's not financially paying. But there is a lot of rewards to it. But we need new members. We need new people that want to be involved and that want to help grow the organization. And there are many rewards to it, not financial, but there are rewards. So, you know, I encourage you to bring people forward that have ideas. We need new ideas. We need to be able to move forward. So we need people beyond the group we have now. That's what we need. So we need your help to do that. Are there any other topics or ideas that we need to discuss before we adjourn? Tom?
Earlier, did we go back and announce the results of the election before the elections for next year?
I don't. Okay, for the there was one. The first vice president is Steve Burkhalter, who is the president-elect, as voted at the board meeting this past Wednesday night. Was there another?
No, but Josh Seeley came on the board this year, and David Douglas both have been put on the board election.
New board members. David Douglas is here. You might stand up, David. I think most people know you. And Josh Seeley, is Josh here? I don't see him. Okay, so we got a couple of new members there. We appreciate that.
I went to bed on time.
All right. Okay. Don't want to draw it out. Any other items we need to cover as a group? Anybody? All right. Martha Ann, thank you so much. Great information. And for tonight, 5:30 is our next. We've got some a reception there, followed by our gala at 6:30, and that's right around the corner here, right between us and the end of the hall here. So that's where that room is for tonight. Tom, you have another item? Thank you. Ed, I saw Ed here earlier. Ed, here's Ed, stand up, Ed. Ed Valencia from the LPR is our new board member as well, and we appreciate his willingness to serve. If nobody has anything else, that's all I've got. Thank you very much.
Thanks, Charlie.